Okay, chapter 12, we're going to talk about dividends now, and there's two types of dividends. There's cash dividends and there's stock dividends. First thing, a dividend is a distribution of money that a company has made, and they are distributing it to their shareholders. So this is a company saying, okay, we earned X amount of money. I am choosing, and they have to choose generally to give this back to my shareholders. If I choose to do that, it's called a dividend. It's a corporation. And when I do pay that, it is called a dividend. I can either pay it in cash or I can pay a stock dividend. So there's three very important dates when it comes to a dividend. The first one is the date of declaration. This is quite literally the day that they state that they are going to pay. The company is going to pay a dividend. Okay, why does this matter? Well, this is because once I say I'm going to do it, that means that I legally have to do it. It's a legal declaration. So this means that at this point I owe the dividend. As soon as I declare it, I owe the dividend, which means I'm going to record a journal entry for that. And we'll talk about what that looks like here in just a minute, but that's a date of declaration, so that's an important date. Date of record. Date of record is important more from an external perspective because a date of record means whoever owns the stock on the date of record is the one that actually receives the dividend. So if the date of declaration, let's just say, for example, let's say the date of declaration was 10/20 of 2020, okay? That's great. So now we know that if we own this stock on 10/20/2020, at least at this point, we're going to receive it. Let's say the date of record is 11/1/2020. That means that if there's a sale between these two time frames, if you own the stock here at 10/20/2020, but you sell it before 11/1, whoever owns this stock on 11/1 is the one that's going to receive the dividend. So the date of record is really important for that reason. But the date of record this tells us who is going to be paid, but there is no journal entry for it because it's just a record of who I'm going to actually pay this to. It's just kind of a line in the sand that we draw that says this is who's going to get it, but there's no journal entry for the date of record. The date of payment is the day we actually pay the liability, which is the dividend liability in this case. The dividend's payable. Pay the liability to the shareholders, and I pay it to whomever owns it on the date of record. So this could be, let's say, 11/15/2020. So if I own it on the 20th, if I don't sell it before the 1st, that means I'm going to receive this dividend. Even if I sell it between the 1st and the 15th, I'm still going to get it because the date of record matters who's going to get paid. This one does have a journal entry to show that I'm paying the shareholders and reducing the liability. So let's look at the example they have in the books. We've got a company, October 1st, Hibbert Corporation declares the following cash dividends with a date of record of November 10th and a date of payment of December 2nd. So they are going to pay $2.50 per share, and they have 5,000 shares outstanding of preferred stock, and they're going to pay 30 cents per share for their 100,000 shares of common stock they have outstanding. So the total dividend is going to be $42,500. So on the date of declaration, okay, the date of declaration, which in this case was October 1st, they're going to debit cash dividends, which is an account that reduces our equity, because the dividend is a reduction in equity. And then we're going to credit cash dividends payable. This is booking the liability side that I now say that I definitely owe this dividend to my shareholders because now I've declared it, and this is the date of declaration. Date of record. It is important. It is an important date to know, but there is no journal entry for the date of record because it's just an external thing that says whoever owns it on this given date is the one who's actually going to receive the dividend. And then on December 2nd would be the date of payment. And so I'm going to get rid of the dividends payable, so that I no longer owe it. And I'm going to credit cash because this is a cash dividend to show that I have paid it. So that's really all there is to dividends, the three important dates: date of declaration, date of record, which is a journal entry for, and then date of actual payment. Okay, now we'll move on to the next video to stock dividends.